January started beautifully. Plan was clear, roles were set. By the end of the month, the market had a different personality. But here's the part no one talks about. Let's talk about what January actually did to my trading. This review is from a swing trading perspective. I trade the daily time frame, so I'm not here fighting 1 minute candles or competing with scalpers on caffeine. I'm looking at structure, patience, and clean execution. Overall, January was decent. There were good structures, clean setups, and a healthy number of opportunities. I took some, I missed some, just, normal trading life. Price respected structure most of the time, but until the tail end of the month. Towards the end, with all the geopolitical news, US presidential comments, Fed talk, and markets just trying to digest too much information at once, things started to slow down a bit. The market felt kind of hesitant, like it was waiting for certain instructions. But from a swing trading perspective, January gave opportunities, and I took what was available. Now, let's talk execution. With every trading month, there is what you did right, and there is what humbled you. For me, discipline was solid. Not perfect, let's not lie, but solid. Most of my trades were aligned with my plan. I'd give myself sort of a 7 out of 10. Not elite, but not reckless either. I was patient, I respected the daily time frame, and I was okay just sitting on my hands for a couple of days. That's just part of trading the daily time frame. Sometimes you wait a whole week with no trade, and yeah, it kind of feels Lego, but quality beats quantity every time. Let's talk about the mistake that slapped me this month. It's the best that I call confirmation bias. This is when you already have an idea in your head, and once you look at the chart, all you see is that idea. You don't see price, you're not seeing structure, just your imagination. For me, this showed up on Aussie USD. I convinced myself I had a clean Bobby shot. It looked beautiful, so beautiful that I actually completely ignored the fact that we were in an uptrend. And that strong resistance had already flipped into support. I shot it directly into the support. At that moment, my eyes were fine, but I guess my brain did not. That trade reminded me that charts don't care what you planned last night. Another lesson came from Card Swiss. On hindsight, it wasn't the cleanest of setup, but price had stalled at the zone for too long. On the daily time frame, when price hangs around like that with no momentum, it's usually a warning sign, sort of. Like, one thing I've learned and keep relearning. If price doesn't move fairly cleanly after entry, that's info. Fast movement equals convection. Stalling, uncertainty. I also missed a clean GBP USD trade. Perfect break and retest. I saw it, hesitated for a moment, and just like that, price left without me. These things can happen, but it still goes into the journal, as a missed opportunity. Now we go to the honest part, the numbers. January closed at minus 3.4R. 10 trades total, 5 losses, 1 win, a couple of break-evens, and 1 active trade still running. That's on, I think, NZDJPY. Not a great month, but also not catastrophic. And here's the real question. Could your system survive 5 losses in a row? Just pause and take a moment to reflect on your risk management. Because mine did. Risk management kept me in the game, and that matters more than one bad month. The lesson from January is very simple. I need to be more patient and more selective. I want trades that scream at me, not just whispering as if it's there, it's not there. You kind of on the fence on it. It looks clean but not clean. That's what I sort of meant. But that said, let's move into the week. Pound Swiss. This one was a break even. This trade carried over from the previous week. It was a clean daily zone, break and retest, 4-hour confirmation, tight stop. Price moved to 1 hour. I protected the position, moved stop to break even, then price reversed. Trade closed at PE, just no drama, no regret, textbook execution. Pound CHF. Again, this is trade number 2. I guess it was just not my week. So, previous resistance had now turned into potential support. It's the same process. Area of interest, check. Break and retest, check. Confirmation, check. So, I entered on a clean engulfing candle, a tight stop, but then, nope, stopped out. Still a good trade, still clean, no strategy hopping, just another data added to the sample size. NZD-JPY, the active trade. This one is still running. It's a weekly resistance flipped to potential support, daily confirmation, clean bullish engulfing. My stop loss is tight. I'm targeting at least 2 hours on this one. Right now, it's hovering near break even. If price hits 1 hour, I protect it. If it stops me out, I move on. This trade is like an arrow already in flight. I don't know where it will land, and I don't need to. The plan will decide. If something happens, well and good. If I lose, well and good. Just no emotions. Delusions for this coming week. Now, for the weekly delusions, there are things I am watching. That is if price is going to be in its best behavior. Same strategy, same rules, no new magic. USD CHF. Former support turned resistance, now testing again. Break, retest, confirmation, same playbook. NZD CHF, clear level, multiple touches, waiting for a clean break, retest and confirmation. If it confirms, I'll execute. If not, I just move on with my life. I have other things I'm also doing. As a swing trader, you have to engage yourself. Euro USD, a very clean zone. Price is already at it actually. If I get a strong bullish confirmation, good. My job is simple. Click buy, manage risk, walk away. That's it. Nothing much. That's all I get to do. This coming month isn't about changing strategy. It's about tightening the rules. Cleaner setups, more patience, less noise. Because the simpler the system, the cleaner the data, and the faster the growth. That's it for this one. Have a solid week, trade safe, and remember to keep it simple, clear, rinse and repeat. Peace, guys.